Hello YouTubers, welcome back to my channel, episode number 2 on my journey to FIRE. I call this account my FIRE account. It's mixed along with my Roth IRA, my main individual stock account, which is from TD Ameritrade, and my 403B, because I work for the government, or 401k, whatever you want to call it, is from Vanguard. The concept remains the same. Every single month, before I pay my bills, I always pay myself first. The first thing I do is, okay, I have to max out my 403B, which is only around 19,000 is the max. And then the Roth IRA is a must max. Take advantage of the tax-free, right? That's only 6,000. That's 25,000. Whatever left over that I have from cash, I put it in my main account and or this small account that I'm trying to grow. And I want to share with you guys along the journey with my friends and family also, that if you do that over a long period of time, consistency will contribute to your account will grow. I mean, a lot of my friends only put in 1 or 2 times a year and that's it. And they miss out a lot of opportunity because when you buy a stock, right? Let's say you put in 1,000 and you suddenly buy $1,000 worth of Tesla shares. And then half a year later, the stock market tanked just like it did today, where it's down 600 points, where a lot of stocks are on discount and you don't contribute any money anymore. You kind of miss the opportunity, right? So that's why every single month I always contribute to my account, regardless what the economy is doing, regardless how much I'm down. Like today, I'm down like over $1,000. I don't even care. So let's get started. You go to the month period from last month. This account has been up and down like crazy. So let's say here, right, it's at 17,000, and then 2 days later it's at 19,000, and then 4 or 5 days later back to 16,000 something. Why is that? Well, because of Tesla earning and IQ earning. They didn't do pretty well, that's why, short term. So that's why it's down. But who cares, right? We are in the long term. Well, I'm in the long term. So I see other position that I have. And I screenshot this right here. It's the same thing, but you know, I just want to show my account number is private. But this is what I'm holding right now at the moment. So let's go to stock number 1, AbbVie. So a quick summary: AbbVie is a pharmaceutical company that makes drugs. They all-time high at 130, which is overvalued right here. When stock goes like this exponentially in a short period of time, like 1 year frame, you want to stay away. You don't want to chase it. So, you know, now it's back down to reality where it's more affordable. Well, not more affordable, but more realistically, because when these stocks move far away from the moving average, especially the green line right here, which is the 50 MA, you kind of want to avoid it. Wait till it snap back to the moving average, and then you begin to build your position. So I bought AbbVie around $68, $69 a share, and that's why I'm only down 2%. Because AbbVie right now is at 66 bucks. So I got in some right here. Next stock is ALGN. Again, this stock is also way overvalued. It has a nice run too. But it was at almost 400 something about a year ago. And I've been following this stock over 2 years ago, back when it was only 150, 140. But I just saw it took off. And once the stock took off, I don't want to chase it. So I'll wait for it to come back down. So I began to buy at 200 level around here, and then I keep tanking. So I bought again at 180, 178, 179. That's why you see 2 position, one here and one on my Roth account. Again, only down 2% each position because I bought it pretty much down here. So that's LAGN. Next stock is Berkshire Hathaway, B, not A. I can't afford A. A is too expensive. So I bought around 199, 98 around here. You can see there's a heavy support again right here, right here, right here, right here. So this is a pretty good support. So I got in right there. Gonna hold it for a while. I think around 115, 215, 220 is a good price to sell. Well, it's a hold for long term. It's pretty good position too. IQ, I don't have to go over that. Johnson & Johnson, I just bought that today at 128. Again, I've been watching the stock for quite a while. Yeah, every single time it hits this purple line, the 150 moving average, it tends to bounce back up, and that's what I did. So it hits this right here at 1/3. I was waiting for it to hit the red, but I didn't. You know what? I'm just gonna jump in. So that's what I did at 128. If it keep going down to 120, low 120, even better. I'll add more towards my position. Johnson & Johnson also pay a pretty decent dividends. Tesla. A lot of YouTuber talks about Tesla. Again, this stock's very speculative, but very fun. At one point right here, I was up, 1,000 something, but I hold on. Now I'm down like 500. So Tesla will be a long run. I want to hold this on for at least another year or two. I do believe that this stock can go over 400 once they release the truck and other stuff they're doing. Model Y, I think they're doing. The SUV mixed with a Model 3. So I'm going to hold on to it. I also want to add more share down here, which is very heavy support around 180. I missed this opportunity right here. I was waiting for 140 right here, but that never happened. It took off, so once the stock took off, I don't want to chase it. Weibo, same thing. A lot of Chinese stocks are now being hammered, not just Weibo. Weibo did a pretty good earning too, but it tanked, so I'll have to hold that for a while. I entered Weibo around low 40s, like $42, $43. That's why I'm only down like 20 bucks. Not much, small position. So yep, that's the difference between this month and last month. Next month probably different too. We will see. I don't know, wherever the market present. Again, every month put money towards your account and let the stock market do its thing. Who cares, up or down? And when it's go up, don't buy anything. Wait, still deposit money to it. When it's go down like today, that's when you buy. Okay, one more quick thing. Lowe's. I also bought Lowe for my Roth IRA, which I don't have here. I bought it before earning comes. I bought it like around 94, 93. And then suddenly earning comes, which is, I'm sure the day. And it just popped. I plan on holding more. But what happened today was the trade war with China and President Twitter. And you know what? I'm going to sell it. So I sold at 108. Made a decent profit right here and gap up. So I sold that for my Roth IRA. Good thing about Roth IRA is that you don't have to pay taxes. And I jump in JPM, which is JP Morgan, around 106. Again, 106 is very heavy support. So I got in. It'd be a bit better if it hits 100, but we will see. I don't know. So yes, that's it. Hope to see you guys in the next video. Take care.